Ind AS 105 Non-current assets held for sale and discontinued operations. Part number 1 Non-current assets held for sale. Scope of this Ind AS. The classification and presentation requirements of this Ind AS apply to all non-current assets and all disposal groups of an entity. The measurement requirements of this Ind AS also apply to all non-current assets and to all disposal groups of an entity except deferred tax assets, for which Ind AS 12 is applicable. For deferred tax assets, Ind AS 12 is applicable. Assets arising from employee benefits. For this, Ind AS 19 is applicable. Financial assets. For this, Ind AS 109 is applicable. Biological assets and agriculture produce. For this, Ind AS 41 is applicable. Contractual rights under insurance contracts. For this, Ind AS 104 is applicable. What is the definition of non-current asset or disposable group? Disposal group, which will be classified as held for sale. In non-current asset or disposal group, that will be classified as held for sale if its carrying amount will be recovered by selling rather than through continuing use. Disposal group. Disposal group is a group of assets and liabilities directly associated with those assets to be disposed of by sale together as a group in a single transaction. Disposal group may be a group of CGUs or a single CGU or a part of CGU. All the classification, presentation, and measurement criteria which are applicable to non-current assets will also apply to disposal groups classified as held for sale. Next, classification of non-current assets or disposal groups as held for sale. Requirements for classification as held for sale. Asset must be available for immediate sale in its present condition, and sale must be highly probable. An asset must be available for immediate sale in its present condition means the terms that are usual and customary for sale does not disqualify the asset from being classified as held for sale. However, it will not be considered as available for immediate sale if the asset continues to be vital for the entity's ongoing operations or the asset is required to be refurbished or renovated before sale to enhance its value and thus will be sold in a distant future. Next, sale must be highly probable. Following are 5 conditions that to be satisfied for the sale to qualify as highly probable. First condition, management must be committed to a plan to sell the asset. Second condition, an active program to trace a buyer and complete the selling plan must have been initiated. Third condition, the asset must be marketed for sale at a price that is reasonable in relation to its current fair value. Condition number 4, the sale transaction is expected to be completed within 1 year from the date of classification as held for sale. Condition number 5, significant changes to or withdrawal from the plan to sell the asset are unlikely. If all the 5 conditions are satisfied, the sale will be considered as highly probable. The likelihood of shareholders' approval should also be considered as a part of assessment if it is required in the jurisdiction. So, shareholders' approval will also be considered. Next, other important points: loss of control in subsidiary, exception to the period 1 year. Sale includes exchange, asset acquired with a view of subsequent disposal, criteria met after reporting period, non-current asset to be abandoned. Another first one, loss of control in subsidiary. An entity which has committed to a sale plan which involves loss of control of subsidiary shall classify all the assets and liabilities of that subsidiary as held for sale when the criteria set out above is met. So, in case of loss of control in subsidiary, all assets and liabilities of that subsidiary will be classified as held for sale. Next, exception to the period of 1 year. An entity can classify an asset as held for sale even if the time frame of 1 year to conclude the sale transaction has lapsed, provided the delay must have been caused by the events or circumstances which are beyond the control of the entity, and there must be sufficient evidence that the entity is still committed to its selling plan. Next, sale includes exchange. Sale transaction includes exchange of non-current assets for other non-current assets. when the exchange has commercial substance in accordance with Ind AS 16. Next, asset acquired exclusively with a view to subsequent disposal. In such a case, asset will be classified as held for sale on the date of acquisition. The standard provides a short period, 3 months, to meet the classification criteria that don't meet at the acquisition date, except requirement of 1 year. Next, criteria met after reporting period. If the criteria of held for sale are met after the reporting period, but before the date of authorization of financial statements, the non-current assets should not be classified as held for sale. However, the entity shall disclose the information in the notes to accounts. Next, non-current assets to be abandoned. If there are some non-current assets which are need to be abandoned, they shall not be classified as held for sale since its carrying amount will be recovered principally through continuing use and not from sale. Non-current assets to be abandoned includes non-current assets that are to be used to the end of their economic life and non-current assets that are to be closed rather than sold. Assets that are temporarily taken out of use and not to be accounted for as abandoned. That means assets which are temporarily not used shall not be accounted as abandoned. They will not be treated as abandoned assets. Next, measurement of non-current assets are disposal groups classified as held for sale. Non-current assets are disposal groups held for sale will be measured at carrying amount or fair value less cost to sell, whichever is lower. Next, measurement of asset acquired with a view of subsequent disposal. That assets will be measured at cost or fair value less cost to sell, whichever is lower. Next, second, measurement of asset acquired as a part of business combination with a view of subsequent disposal. They will be measured at fair value less cost to sell. Next, depreciation and amortization on assets classified as held for sale. In case of assets classified as held for sale, depreciation and amortization shall be immediately stopped from the date when the asset has been classified as held for sale. So there will be no depreciation or amortization in case of assets classified as non-current assets or disposal groups classified as held for sale. A recognition of impairment loss and reversals for non-current assets. An entity should recognize an impairment loss, that is carrying amount less fair value less cost to sell, on initial or subsequent written down of an asset to fair value less cost to sell. A reversal of impairment loss is permitted for any subsequent increase in fair value less cost to sell of an asset, but not in excess of cumulative impairment loss that has been recognized earlier, either in accordance with this Ind AS or previously in accordance with Ind AS 36 impairment of assets. So reversal is permitted, but reversal should not be in excess of impairment loss already recognized earlier. For disposal groups, impairment loss for an disposal group should reduce the carrying amount of the non-current assets in the group that are within the scope of measurement requirements of this Ind AS. Next, order of allocation of impairment loss to assets in disposal group. How to allocate impairment loss to assets in a non-current assets held for sale or disposal group. First, reduce the carrying amount of goodwill allocated to the disposal group, then to the other assets of disposal group on pro rata basis of the carrying amount of each asset in the group, except those assets to which measurement requirements of this Ind AS are not applicable. For example, inventory, trade receivables, investments, etc. For inventory, trade receivables, investments, Ind AS 105 is not applicable. Their respective Ind AS will be applicable. Reversal of impairment loss on disposal group is permitted for any subsequent increase in fair value less cost to sell, but not in excess of cumulative impairment loss that has been recognized earlier, except for goodwill. So impairment reversal is permitted. To what extent? Maximum extent of impairment loss already recognized earlier. Next, changes to a plan of sale. If an entity has classified an asset or disposal group as held for sale, but the held for sale criteria no longer met, the entity should cease to classify the asset or disposal group as held for sale. On the date when it ceases to be classified as held for sale, the entity shall measure the non-current asset or disposal group at the lower of the following: carrying amount had the asset not been not being classified as held for sale, and recoverable amount. At the date when asset ceases to be classified as held for sale, lower of the following will be taken. If an entity disposes or sells an individual asset or liability from a disposal group, then remaining non-current assets of the group that individually or as a group meets the criteria to be classified as held for sale shall be measured at lower of carrying amount or fair value less cost to sell, whichever is lower at that date. And any non-current assets that do not meet the criteria shall classified as cease to be classified as held for sale. Presentation of non-current assets disposal group classified as held for sale. An entity is required to present a non-current asset or disposal group classified as held for sale separately from the other assets in the balance sheet. In case of disposal groups, the assets and liabilities should not be set off and presented as a single amount. So they need to be separately presented. Assets need to be separately presented and liability need to be separately presented. Next, discontinued operations. What do you mean by discontinued operations? Discontinued operation means a component of an entity that has been disposed of or classified as held for sale represents a separate major line of business or geographical area of operations, and it is a part of single coordinated plan to dispose of a separate major line of business or geographical area of operations, or it is a subsidiary acquired exclusively with a view to resale. Component of an entity, it comprises operations and cash flows that can be clearly distinguished operationally and for financial reporting purposes from the rest of the entity. In other words, a component of an entity will have been a cash generating unit or a group of cash generating units while being held for use. Presentation of discontinued operations. An entity should present and disclose information of discontinued operations separately from continuing operations. Change to a plan of sale. If an entity ceases to classify a component of an entity as held for sale, the results previously presented in discontinued operations should be reclassified and included in income from continuing operations for all periods presented. The amounts for prior periods should be described as having been represented. So, if a component ceases to be classified as held for sale, previous results should be reclassified and include it in continuing operations for all periods. The previous period amounts should be described as represented amounts. This should be done in case of change to plan of sale. Change to plan of sale.